The Canadian outlook in 2020 is likely to be pretty similar to what we experienced last year. We've taken a big risk off the table, which is the China-US trade war, but there is pretty compelling evidence that the economy slowed reasonably significantly towards the end of 2019. We see this in the labor market information, we see this in consumer confidence data, we see this in some of the manufacturing activity. So there are clear signs that the uncertainty that we saw last year had an impact in the fourth quarter of last year. The question going forward is how much of that weakness is going to transmit through 2020. We think not very much at this point in time, but what we're really paying attention to are measures of consumer confidence. If those continue to fall, if they continue to be weak, that is a reasonably negative sign about where the economy is going to go. We don't think that's the case. Labor market remains very strong in Canada. Wage growth remains very strong. There are lots of positives going on. So we think that as the first quarter unfolds and we go forward in the year, those signs will strengthen and we will end up with an outlook that is pretty similar to what we experienced last year. Putting it all together, we think we'll grow about 1.5% in Canada this year. That's roughly what we experienced in 2019. It's not fantastically strong growth, but it's very far from the recession that people have been fearing for a while.